Okay, recording this video on Wednesday, the 24th of March 2021. Just gone 23:12 p.m. Chicago time. Do hope you are doing well. So, a midweek chart review, and I think it's been a really important couple of weeks because we've been forming this kind of topping pattern, and we still got a ways to go in a couple of markets before they kind of roll over. But I definitely think we can see the beginnings of this weakness. So going to go through a bunch of charts, going to go through the E-mini charts on the daily and the 15-minute time frame, going to go through bonds, dollar index, euro, Aussie dollar, crude, gold, silver, and Bitcoin, and then go down to a couple of tick bar charts on the Aussie dollar, Bitcoin, and I can't see the third one there, but anyway, there'll be a third one. Anyway, so this is my usual setup, left and right screens, both showing the E-mini continuous contract at ES on TradeStation. On the right-hand side, we've got Better Sine Wave, which is a price-based indicator. Better Sine Wave is below the price bars here, showing the cyclical activity in 3 different time frames, and that allows us to plot support and resistance levels on the time frames on the price bars themselves here. Thin lines are the lowest time frame, thick bars lines are the highest time frame. Left-hand side, everything to do with volume. Better momentum below the price bars here, which is a volume-based momentum indicator. And then on the price bars themselves, you've got Better Pro-Am, which is identifying professional and amateur activity based on average trade size. Then on the background, when the two volume indicators and price indicators are both in sync, the background is printed red for an uptrend and grey for a downtrend. Just while we're talking about Better Pro-Am, I get questions from time to time about how the algorithm for Better Pro-Am works. Obviously, I can't tell you specifics, but it's just using the average trade size for that particular market, and it's using an algorithm that varies based on the market and the time frame. So it's not using hard and fast kind of numbers in there for any markets. It's adaptive, if you like, for each of the markets and the history that you're looking at. So you can compare professional bars today with professional bars 10 years ago on the E-mini, and the indicator kind of basically adjusts for those differences. So just a kind of a little point of clarification on Better Pro-Am. But anyway, let's talk about the E-mini. And what I want to show you is this: the S&P 500 is this sequence that we had leading up to the crash last year, January, February last year. And there's the interesting point that I'm seeing a similarity in these two is the market was being driven by the amateurs. So we had Rambo patterns and Rambo patterns. Rambo patterns here up into that high around the 3,400 mark. So we had little amateur bars. Amateur bars making new highs is a Rambo pattern, which is a potential reversal of an amateur breakout. The breakout is being driven by the amateurs. That means it is suspect and weak. And what happens is, so we're just alerted to the fact that that's an important point. I always use the lows of that kind of sequence as an important break point. I'm never going to be taking a short trade based on a Rambo pattern. I'm going to be waiting to see if we get a proper break of the lows of that kind of sequence. And we didn't, but it shows an interesting point of inflection. So if the amateurs are kind of getting long here, they've got their stops kind of below that kind of entry point. So as soon as we start breaching that point, we start to, create havoc, because then the amateurs don't know what to do. They're kind of getting out, getting short, whatever. After that move is kind of being led by the amateurs on the way up, you can see here then we have blue professional bars following up a few days later. Blue professional bars pushing up into that peak. And that is amateurs, that is professionals forcing the market up. And then I always think about this zone after we've had a huge rally in the market from this low down here to this high. So what they're doing at this point is they're forcing those the market up into those kind of new highs. And I always think about that zone above the new highs all the way down to the lows of that kind of that sequence of blue professional bars. I think of that as the killing zone, and it's like an area where the professionals have pushed it up, and then at that point they're using all of that volume to get out, to distribute, to get out of their positions. Remember that the amateurs have been buying up into those highs, and they're kind of likely to be active up there. The average trade size is still going to kind of be medium size because they're distributing. to the amateurs at that point. But this is kind of the killing fields kind of area here. And then as soon as we break that support, the trailing support based on better pro-am, then all hell breaks loose and we break down into a severe kind of correction. Well, we've got a very similar pattern kind of going on over the last couple of months since the beginning of the year. Leading into December, we had Rambo patterns kind of into those highs. So we know that the highs are being bought by, the amateurs, and then we have the professionals kind of forcing the market up there. So for me, this whole zone from wherever we are at the moment, just under the 4,000 kind of mark, down to 3,700, all of that is the killings fields kind of killing zone for the professionals, where they'll be rotating positions and potentially getting out. So for me, the most important number is just above this 37. If we crack that, we're going to see a sell-off of some kind of magnitude, I'd have thought. But they're going to take their time around here. It's not going to be a quick and dirty thing. This one was relatively quickly. You can see exactly the same patterns on tip bar charts, kind of lower time frame charts and so on. And this area is where a lot of people kind of get confused. They're thinking, oh, is it going down? Is it going up? Should I be, following, going long? It's an area of kind of confusion. And so I just like kind of holding back and waiting and seeing. And as soon as we get kind of a move down to 37.11, that's going to be for me like a real signal that things are in trouble. In terms of cyclical activity, yes, we got a pullback to end of trend on the lowest time frame here, but we are still well above cyclical resistance on the intermediate time frame here. So my guess as to what we're going to do is we're going to have some weakness into support on the intermediate time frame on this daily chart, and then we'll put in a pullback to end of trend. Again, the same thing, a pullback to end of trend patterns rippling through the time frames. This is the lowest time frame, the first kind of left shoulder on here. We'll have some weakness, we'll come into that pullback support on the intermediate time frame, and then we'll push back up into the end of trend on the intermediate time frame. Where that level is, who knows? It could be above here, could be kind of below here, not sure. But we have to work out this cyclical activity before it can all kind of roll over and go the other way. Now, I've not looked at this. So slightly different on this last time around in the beginning of 2020. This pattern here, we had the resistance on the intermediate time frame was pretty extended. It was pretty high up anyway. This one is way down. Because it's way down from here, that means the trend is really strong, and therefore we need to put in to pullback to end of trend. This one didn't put in a pullback to end of trend because it was kind of just poking above it, if you like, and that support kind of came in on that intermediate time frame at that low that was made kind of in April last year. So it's just interesting to me, for me, to see that kind of pattern repeated. And it means this kind of level here is absolutely key, but doesn't mean it's all going to happen in the next day or two. We could fuss around quite a bit, and then before it's all over, we've got to put in pullback to end of trend on the intermediate time frame. But shorter time frames and kind of trading down on the 15-minute chart, we can see that we've broken now, having kind of topped out nicely. With end of trends here, we've been rolling over, and on the 15-minute chart we've broken into weakness here. We had kind of confirmed weakness here, but another push back up because we were still above resistance on the highest time frame here. But then we've gone up to make support in that highest time frame. We couldn't make it out to a pullback to end of trend. We've had this weakness. We've crashed kind of below it. We're below a couple of supports on the lowest time frame and on the intermediate time frame. So this is weak, and that's looking weak, and we're going to have to go down and make pullback to end of trend kind of patterns down here to kind of find a bottom on the 15-minute chart. So there we go. It's taken a while to kind of roll over the last kind of week or so, but I think we've got kind of consistent weakness happening in the equities market at the moment. And we've also had this huge sell-off in the bond market. This is the 10-year at TY. This was just such a weird pattern here up into the highs in 2020, and then we pressed back up to test those highs right under the trailing stop of Better Pro-Am with Rambo patterns up here, and we've had weakness ever since. But here it's kind of the reverse. So going into the strength in equities this time around, now we've got the bond market selling off, and we've got all these blue professional bars coming in with exhaustion sell down here. So we're ripe for a turnaround and a more traditional kind of reversal of the market where equities sell off and the bond market kind of rallies. But before the bond market rallying properly, we need to put in some nice end of trends. And we've not done that yet. We're just below supports on 3 different time frames there. So we've got to go see, some kind of pattern with pullback to end of trend like we saw down here to bottom this. Yes, volume seems to come first, and blue professional bars are always kind of early into the piece, but the price activity needs to kind of fully compress and get those cyclical patterns out with pullback to end of trend. So we could have a little bit of a rally in 10-year bonds and then form a pullback to end of trend on there before we get a proper rally in the bond market. Dollar index, well, I've been rattling on about the dollar index for the last couple of months, just trying to figure out what's happening here, and now we've finally got a clear picture what's kind of going on. So having had huge decline in the dollar index during the equities rally, now we've found a bottoming pattern here from the beginning of the year. We've had now blue professional bars kind of come in here. The trailing stop trailed down on Better Pro-Am. We broke above it. We tested down to the bottom of that, and then all these blue professional bars were buying those lows. Just like they were selling those highs, they were buying those lows, and we've got exhaustion buying, getting the move going. So this is not an exhaustion pattern where we're going to roll around from. This is, we're at the bottom of, a historic kind of range. We're coming out of here with a lot of buying in dollar index. I don't follow the news much, kind of financial news much, because it tends to cloud your judgment. But I know this will surprise a lot of people that we've got strength in dollar index, because I think a lot of kind of longer term commentary is about dollar index just going down, down, down. But we could have a rally here. We've got now broken into an uptrend here. We're breaking above 2 time frames, the low in the intermediate time frame on the dollar index. So this is looking good for a breakout. Confirmed background printing as red means the price signals and the volume signals are kind of now in sync, and we've got ourselves an uptrend in dollar index. So this is an important kind of inflection point, but there's going to be ups and downs and wiggles along the way. So because dollar index is going up, euro is going down. So euro kind of topped out here with resistance, pullback to end of trends, and today was the first day where we broke below, or yesterday was the first day we broke below support on 2 different time frames at the same time. So they're both sitting there up here at whatever that level is. 18,595 is the support in 2 different time frames there. So a break of 2 time frames at the same when they kind of overlay each other like that tends to be strong moves. Yeah, we could easily kind of press back up and take people out who are short and kind of freak them out a little bit, but a break of 2 time frames tends to mean that it's going to be a strong move on the way down. Let's wait and see. It could happen tomorrow. It could be a solid day down in the euro. And when I'm looking at this on Better Pro-Am, we've got blue professional bars here, and we've broken below the lows of that. So the trailing stop for Better Pro-Am trailed it up, and now today's activity, we kind of broke below that. So that's really significant. I'm playing it on the Aussie, short Aussie at the moment, because the Aussie dollar tends to be a high beta type of forex play. And we topped out kind of at 80 cents against the US dollar. Blue professional bars kind of come in here, take profits, and we know they're taking profits because we've broken below the lows of that sequence. So Better Pro-Am trailed the stop up, we broke below it, and now we've got a similar break to the euro chart there, below supports, on the lowest time frame there, the little points there. That's why we've kind of triggered into a downtrend on the Aussie dollar. So all of that's kind of interesting. Crude, I did not catch the top in crude, and kind of annoyed about this, but it's been pretty bouncy over the last couple of days. I've had one good trade in the last year in crude, and all the others have been either just not interesting or just wrong. So I don't know, maybe I should stick to natural gas instead of crude. But anyway, exhaustion sell, blue professional bars kind of coming at the lows here. This is where we talked about kind of negative crude prices, and then we'd rallied all the way up. But on the high side, I'm not convinced it's all over for crude. Yeah, we've got a whole bunch of blue professional bars kind of coming in here, taking profits and so on, but it's pretty weak in terms of volume. There's no exhaustion buy patterns there. And then on the cycle side of things, we're above resistance on the low and the intermediate time frame here. We're playing out support to resistance on the highest time frame, and resistance here means that we're coming down to form a pullback support. So for me, I don't think shorting crude is the right thing to do. I think we need to be waiting over the next couple of days for this support to come in on the lowest time frame with this fast and slow line. When they cross, that's kind of timing for when we'll get support. We'll need to go pull back to end of trends on those two time frames with an exhaustion buy pattern. So it's kind of been exciting the last couple of days in crude, but I don't think that's actually the play. I don't think short crude is the play right now. Gold, I don't know, gold's not interesting to me at the moment because there are no blue professional bars to tell us what to do. The last interesting pattern here was amateur bars up here testing up into 2000. Amateurs getting wrong-footed. We kind of gone the other way. I'm waiting for a blue professional bar to come in on gold to signal that the professionals are kind of interested at some level. Silver, though, is interesting. I think silver and gold, don't necessarily, I've said this before, kind of trade together. They can often trade very differently, and so it's a mistake to think of all precious metals kind of moving together. Maybe over the long term that's true, but swing trading, I don't think that's true. You can be long gold and short silver at particular points in time. So silver, kind of topped out here up at $30 with all these blue professional bars, exhaustion, buying, bearish divergence kind of come in. We test back up almost exactly to that high and get rejected. What I find interesting at the moment is this last little move here was amateur up bars. So amateurs were thinking, higher, low, buy it. Maybe we'll break 27. No, I don't think that's right. We're coming under the lip here for this kind of trade. You can see there was the signal a few days ago for under the lip. And we're breaking support in the intermediate time frame. We've got confirmed downtrend here happening with both price and volume kind of going on. So gold is not interesting, but silver I think is a potential short at that point there. Bitcoin. Now, is it any wonder that Bitcoin has weakened from this 61 level? And all I'm going to show you, this is my usual kind of confusing chart. Three different ways of plotting Bitcoin. We've got the futures at BTC, we've got the real-time index, dollar BRTI, and then we've got kind of almost like a forex contract, the BTC USD in TradeStation here. They had a beautiful little pullback to end of trend double pattern, pullback end of trend, pullback end of trend. So things are getting pretty extreme on the high side there with a double end of trend pattern like that. And we had bearish divergence pattern kind of coming here right up there at the 61,000 kind of level. So, but I'm a super bull. I'm a hodler, as they call them in Bitcoin. So for me, it's just a question of waiting until it kind of comes down to an interesting kind of re-entry point and pick up a little bit more. But that's why we've weakened in Bitcoin, because we kind of had a volume momentum signal that showed a bearish divergence, and the volume kind of went the other way. Okay, tick bar charts just really quickly. Here's the Aussie dollar. This is where I got shortened the Aussie dollar on that retrace up here into the 77 somethings. We had exhaustion buy, a whole series of blue professional bars testing back up there. And we've kind of rolled around. Blue professional bars kind of come in at this point here and holding it, and we've got a little pullback to end of trend. But on the downside, we've not seen an exhaustion sell pattern. We've still got to see pullback to end of trend on the intermediate time frame on the Aussie dollar on tick bar charts. So I think the Aussie dollar's still got a ways to go on the downside. I don't know how big the reading's going to be, because that was pretty extreme. When you look at the momentum patterns for that kind of read up there at the 7,000 level was big. So we'll have to kind of wait and see, but just holding my short on Aussie dollar. Have probably sit through a little bit of jiggery pokery here, but it's not over until we see pullback to end of trend on the intermediate time frame and an exhaustion pattern there. Bitcoin. So is it time to get back into Bitcoin? I do not think so. So the high up here at 61,000 when it was made, we got an exhaustion pattern here, amateur bars on the way up, very few blue professional bars up here. We had a little bit of a sequence, kind of last time. I beg your pardon. This is the tip bar chart, so we've kind of had a couple of pushes back up into 60. So the 61,000 type level here was led by blue professional bars, exhaustion buying, bearish divergence. That's a tip bar chart. And then we came back up, exhaustion buying, a little blue professional bar kind of comes in. We have a little under the lip kind of pattern. We kind of roll over, test back up into 57, more blue professional bars there coming at those highs, and we kind of sink off. But yeah, we've got one exhaustion pattern there, but we have no blue professional bars kind of down here. So we've got to be, sitting through a little bit more kind of weakness on the downside, I think, until the professionals really kind of step in. We'll wait and see. It's cyclically something's kind of going on, but there's no blue professional bars at the lows there, and I'd like to follow the professionals into a retrace move there. Yeah, this is Crude. So Crude has had, exhaustion, sell, blue professional bars down here, starting to rally up, back up. But I think we're going to have to go see a resistance to support move on the highest time frame here, because we've gone so far below support on the highest time frame. We need to put in some kind of pullback to end of trend type sequence on the highest time frame. So I think these traders just a fraction too early. So, but I still think there's a play over in the next couple of days in Crude, and we'll see how that works out. So there we go. That's it. A whole bunch of charts, a whole bunch of talking. Hope you enjoyed it.